In 1900, ore mined for copper often contained around 4% metal. Today, most mines operate well below 1%, many in the range of 0.4 to 0.8%. That means producing the same ton of metal now requires moving several times more rock than a century ago. In other words, we're running out of easy copper, and in a world attempting to electrify at scale, that matters. For every electric vehicle, every wind turbine, every data center, and every kilometer of electric cable. Copper is not disappearing, but the conditions under which we extract it are changing. In absolute terms, it isn't rare. It exists throughout the Earth's crust in concentrations measured in tens of parts per million. What is rare is copper that is concentrated enough, accessible enough, and politically stable enough to extract cheaply and at scale. For more than a century, industrial growth rested on unusually rich deposits. Early miners in Montana, Chile, and Zambia extracted ore so dense it required relatively little processing. Infrastructure followed the ore, energy was cheap, environmental constraints were minimal. That era is over. Ore grades have fallen steadily for decades. As richer deposits were depleted, companies moved to lower concentrations. If grade falls from 1% to 0.5%, roughly twice as much material must be mined and processed to produce the same ton of copper. But it isn't only rock that doubles. Energy use rises, water demand rises, waste volumes expand. Lower grades mean declining energy per ton of metal. The system becomes heavier physically and financially. Production becomes more capital intensive and more energy intensive at the same time. In Chile, the world's largest copper producer, average ore grades have fallen by roughly 30% over the past 15 years. Maintaining output now requires moving significantly more material than in previous decades. Despite heavy investment, sustaining production has become more difficult as mines age and grades decline. More rock, but similar metal. In many cases, the industry is now moving far more material each year simply to maintain the same level of production. The industry has responded with scale, larger pits, bigger trucks, and more automation, but scale doesn't change geology. For much of the 20th century, rising copper demand was met by discovering new high-quality deposits. When one mine declined, another often replaced it. But the era of giant, easily discoverable surface deposits appears to be largely behind us. New discoveries tend to be smaller, deeper, and lower grade. Exploration technology has improved dramatically, with satellite mapping, advanced geophysics, and increasingly sophisticated modeling, yet the average quality of new discoveries has continued to decline. The geological frontier has shifted towards harder, more marginal deposits. While grades fall, demand is accelerating. According to a 2026 S&P Global study, global copper demand is projected to reach roughly 42 million metric tons by 2040, about 50% higher than today. This growth is not coming from one source. It's coming from multiple systems scaling at once. First is the energy transition. Electric vehicles typically use 3 to 4 times more copper than internal combustion vehicles. Renewable energy systems rely heavily on copper wiring. Grid expansion, especially transmission, infrastructure, and substations, require vast quantities of conductive metal. Then there's electricity itself. S&P projects global electricity demand rising by nearly 50% by 2040, meaning that demand requires enormous investment in generation, transmission, and distribution infrastructure. Electrification shifts energy systems from fuels to wires, and wires require copper. This shift is foundational. Fossil fuel systems move energy through liquids and gases, oil pipelines, tankers, and storage terminals. Electrification systems move energy through metal. Every additional megawatt of generation requires transformers, substations, switchgear, and distribution upgrades. Electrification does not simply increase power demand, it increases the density of metal embedded in the system. Replacing combustion engines with electric drivetrains substitutes fuel for wiring. Replacing gas boilers with heat pumps substitutes gas pipes with electrical infrastructure. Even efficiency gains often require additional circuitry and control systems. The energy transition is in material terms a metals transition, and copper sits at the center of it. On top of this, data center capacity is expanding dramatically as artificial intelligence systems scale. Each facility requires transformers, backup power systems, cooling infrastructure, and grid connections. At the same time, rising geopolitical tensions and reindustrialization efforts are increasing demand for manufacturing capacity, power systems, and advanced electronics, all of which depend on copper. Demand is accelerating across the entire economic system. But supply isn't scaling at the same speed. Global copper production is projected to peak around 2030 at around 33 million tons. If current trajectories persist, supply could fall nearly 10 million tonnes short of projected demand, roughly 42 million tonnes by 2040. Even with recycling more than doubling from roughly 4 million tonnes today to about 10 million tonnes by 2040, the shortfall remains substantial. Recycling helps. Copper is highly recyclable without loss of quality, but recycling depends on prior production. It cannot expand rapidly unless large volumes of copper were mined decades earlier. Primary production remains essential, and primary production is becoming harder. New copper projects are deeper, lower grade, more remote, and more capital intensive than those developed in the 20th century. On average, it takes roughly 17 years for a new copper mine to move from discovery to production. Permitting, financing, and construction all contribute to that timeframe. Mining is no longer simply an engineering challenge, it's also a political, environmental, and financial one. And supply chains are also concentrated. 6 countries account for roughly 2/3 of global mined copper production. Processing capacity is even more concentrated. China alone accounts for more than half of global copper smelting capacity. And this concentration increases vulnerability to disruption, trade policy shifts, and geopolitical tensions. Supply risk is no longer just geological, it's systemic. Capital intensity has also risen sharply as lower grades and deeper deposits push project costs higher. New large-scale mines often require tens of billions of dollars in upfront investment. These are long-duration, politically exposed projects with uncertain price environments. Several industry leaders argue that sustained prices well above recent trading levels are required to justify the next generation of projects. But high prices create their own challenges. They raise the cost of electrification, increase infrastructure spending, and feed through into inflation. The copper market faces a paradox. Prices must rise to unlock supply, but rising prices strain the very systems driving demand. When marginal supply becomes harder, markets behave differently. Supply becomes less responsive to price spikes, deficits persist longer, and price volatility increases. During the commodity boom of the 2000s, rising prices triggered a wave of new mines, but many of those mines had already been discovered years earlier under very different geological conditions. Today, the pipeline is thinner. Discovery rates have slowed, high-grade surface deposits are rarer, new finds tend to be deeper, lower grade, and more complex to develop. In other words, the industry is no longer expanding from abundance, it is increasingly defending output against depletion. The problem is not that copper is disappearing, the Earth still contains vast quantities of it, but much of that copper exists in deposits that are harder to reach, harder to permit, and far more expensive to develop. And that changes how quickly supply can respond when demand accelerates. The result is a growth mismatch. Electrification compresses timelines, but mining extends them. And that mismatch is now one of the central challenges of the global energy transition. The world is not running out of copper, but it is running out of copper that is cheap, easy, and fast to produce. Copper is the enabler of the next industrial era, but it may also become the bottleneck created in the last one. Not because the copper isn't there, but because turning geology into supply takes decades.